So takes us into the rental market update. And a heading here. So UK rental growth outside London hits 13-year high. Fantastic news for you guys. Interestingly, 6 months ago, for anyone that was here, you probably won't remember because it was a long time ago. My heading was the same, but it read 4-year high. So, you know, again, you can see where this is going to go, can't you, really? Similar to my sales graphic, everything appears to be up, including annual growth in rents, reduction in time it takes to find a tenant right now. That's gone down by a day since the last time I put one of these graphics up. London still appears to be down, so the figure to focus on really for our benefit and where we are is the growth excluding London. Average rent nearly £1,000 now. Again, that would be including London as well. Without London, it's about £740 a month on average now in the UK. Ultimately, busy season, so another huge surge in the summer has seen renter demand rise for the 5th consecutive quarter. And with over 1 in 5 new rental tenancies agreed in August to September, the market's really busy at the moment. The number of available properties to rent is down over a third on a year ago. So as in the sales market, a shortage of stock has seen average rents rise across all regions of the UK, including the capital. This is coupled with the fact that tenant demand, of course, is very high at the moment. With the work from home, if you can, advice now lifted, many of the UK's largest city centres are seeing demand return too, with growth reported across all major cities. And as I say, it's a very fast-paced market. So it currently takes an average of just 15 days to agree a let in the UK, which is the quickest turnaround recorded in 5 years. It'd be interesting, guys, put something in the chat if you've had, you know, if you've been letting properties recently. Like, let us know what your experience has been. I went to see a landlord the other day who self-manages, and he actually made the point of saying he used one of these platforms to access Rightmove. He was inundated with 50, 60 inquiries in the first couple of days. It wasn't open rent, it was someone else. Can't remember what it was now. But he had 50, 60 inquiries in the first couple of days, realised he didn't really have the time to go through all of that. I was quite overwhelmed with the activity. But, you know, it kind of just backs what we're saying. It's such a fast-paced market and the demand is huge. Year to date, rental demand is up by around 20% compared to the total stock of rental property, which is down by 13%. So this year has seen a lot less than what we used to. At the moment, my office here in Wolverhampton, we are registering on average just over 1,000 new tenants a month to the database, and that's literally the average throughout the year. So that's taken from the first 10 months when I did this. Last year, we averaged 495 new tenants per month across the whole of 2020. So you can really see the vast difference. Throughout the year, we've also averaged 5.2 applications per property let, which means our landlords have had a choice of tenants in pretty much all cases. The forecast going into next year, expect the pressure on rental price growth to remain, and therefore an upward curve to very much continue. And here's a graphic just breaking down growth by region. Obviously, you can see where we are there in the West Midlands. Average rent is now £716 across our region, and I think it's gone up 4% in the last 12 months. Now, I actually believe the price increase is a little bit higher than the stats suggest, but of course, it's gonna vary across property size, type, exact location, that sort of thing. So I've put together just a couple of examples of real recent lets. This is one in Kingsbury Road, Nerdington. And you'll see here, so we let it for £700 a month last year, so last September. Re-let it this month for £750, which represents a 7% increase in a year. It's quite a nice one, that is. That's just re-let this month. And then one in Wolverhampton, Dales Close, 2-bed house. Again, last June, we let it for £650 a month. It's re-let this month for £725, which is an increase of 12%. My conclusion. This is actually the same conclusion that I had 6 months ago, and as I was editing the slides, I actually didn't really know what's changed because it's still very relevant, and obviously I do still see opportunities for buy-to-let landlords, as I say. So just going on to a little bit about property investing, here's a little fun fact for you. I found this on one of my reports, which was quite cool. So during the past decade, the average price of residential property in the UK has increased by 46%. This is more than double that of gold, which stands at a 20% value increase. And over the same period, the FTSE 100 has risen by around about 18%. Dawn, do you mean to be on camera? No, good stuff. So yeah, look, property wins. Obviously, over the last decade, you know, that's the average return. I know there's going to be some parts of the country that may not be quite in line with that. There's always seems to be some cheaper areas up north that the value just never changes. Have you noticed that? Doesn't matter what time of the year, what decade you're in. It's always roughly the same price for a little two up, two down in certain parts of the country. But there you go. So buying to let across the UK, there are believed to be in excess of 2.6 million private landlords. And for many, the reason for investing in property is financial. Of course it is. You invest to make a profit in most cases. Now property now is still a valuable asset despite significant legislative changes and other challenges that we face in recent years. But if well kept and managed, it can provide additional income in the short term, whilst over the long term, rising values can give capital growth. So when we typically invest in property, they're normally your two options and ways of making money, right? Now, I was thinking of doing a load of buy-to-let content, but as I started brainstorming, I realized there's so much that I didn't know what to focus my time on. So I think what jumped out is I think there's actually call for another separate webinar more geared around buy-to-let as opposed to trying to muddy the waters with this one. Bear in mind we're on limited time and Dawn's got a lot of legislation stuff to go through as well. What I do want to do tonight is just introduce any of you guys, if you're interested, just for a couple of minutes to investor targeted services that we offer. So I've been working with a couple with investors lately to help them source properties, do the right deals, build their portfolios, and really get into investing. I do this via my buy-to-let advisory session, which is a great session if you're not too sure where to start, or if you're not sure how to get the most out of what you've already got and make your money stretch for you, or not too sure where to buy, or what, you know, whatever it might be. So we go through a whole workbook where really it just makes it clear what works for you, what's you know, the advice is tailored around your needs, your goals, what sort of investor you want to be, that kind of thing. And by the end of it, you'll have a really good idea of what type of property to go out there and try and find for yourself. And that then feeds into the buy-to-let acquisition service, which again is a service where I can help you go and find that property. We can source it, do the deal, do the negotiation, oversee the purchase, all that kind of thing. I have an onward negotiation service if that's something that would interest you. And then if you are interested in buying any property, we can offer free tailored property reports, which give you a real detailed look at the property itself, all the stats online valuations, area demographics, you know, local area stats, local market stats, all that kind of thing. So these are the investor services we have. And just to give you an idea of what sort of thing I can help work with you on, this is, I've got 2 case studies of recent properties I've sourced for other investor clients. So this was a 2-bedroom flat in Willenhall. This was an off-market deal. Obviously, we get every now and again, some good off-market opportunities. That's what we look for. They're the best for us. Purchase price of 80,000, on-market value more like 95, based on comparables within the block. Rental value 6 to 650, no work needed. Really good gross yield of just under 10%. Return on cash after costs is just over 15%. So again, it's a good cash flow buy-to-let. So quite happy with that one. And then another one was in Bilston, 3-bed semi-detached house, again off market, purchase price of 110, on market value at the time of about 125. Needed some refurbishment, done up value of 150 at the time of purchase. The rental value, I put 600 because that's what the current tenant was paying. We bought this tenanted. And just based on the current, you know, the 110 and the 600 a month without doing any work and putting the rent up, which obviously there was a scope for, the gross yield was nearly 7%, and the return on cash again after fees and costs was about 13%. So again, a couple of really good examples.